GameStop shares under pressure after the company acknowledged in a filing it was considering selling more shares. Earnings of $1.34 per share fell a penny short of estimates, but revenue did beat forecasts. Same-store sales rose 6.5% last quarter, and global e-commerce sales jumped 175%. Joining us now to talk about GameStop and the markets in general, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Good morning, Steph. I mean, GameStop, kind of a fascinating example of, there's the phenomenon that is the stock, and then there's the business, which we got a glimpse at last night. It was a moment when the stock itself was sort of whipping around the rest of the market that maybe has calmed down. But how would you just view this as you try to reconcile what the stock's been up to with how the business is going and what maybe they have planned for it?
Yeah, I mean, I think the bright spot, you highlighted it, in the quarter was e-commerce. Global e-commerce up 175%. And now e-commerce represents 34% of total revenue versus 12% last year. So they're headed in the right direction. They also closed 232 stores, but they still have 693 stores. And on the negative side, you have gross margins fell 610 basis points. You had COVID hit their stores substantially, so they had a lot of closures. And then the elephant in the room is the secular headwinds. You ask any 10 to 15-year-old, they're downloading games, right? They're not going to these stores. So I think the big news is if they're considering the equity raise, they need it. It's prudent. It's very, very much so needed and necessary because transitions take time. Turnarounds take time. I think they're making very good progress in terms of kind of management changes with the CFO leaving, and now they have a CMO that came from Amazon. We know what the co-founder of Chewy is doing and really leading the charge. So I think there are some positives in place. But all that said, Mike, the stock's up 864% year to date. And so it's going to take time. Yeah. This is not my kind of name, but it is, they're headed in the right direction, but we gotta be patient.
Yeah, and I also think we have to just sort of set the framing of this as how it's valued right now. On a price to sales basis, GameStop is at 4 times the valuation of Best Buy, which is not a company that has necessarily gotten blindsided by e-commerce, right? So, I mean, just, how far the stock has come is a good reminder there. And
So, Stephanie, just going back to GameStop for a second, because you said it's going to take time and you understand, I guess, sort of the possible bull case. I'm just wondering whether it's likely to play out, because they point out, okay, there's 3 Bs. They need to avoid Blockbuster. They need to avoid the fate of Borders. But maybe they try to embrace something like a Best Buy model. What Best Buy's done much better than others. Somehow, I guess by service, and you go in and, they'll help you with. I thought Best Buy might go the same route, but they're not going to. They're doing pretty well. But even if they were successfully to reach the Best Buy model, it's already gone from $5 to 160. What is the Best Buy model if they're successful in getting there? What is that worth for GameStop? Is it worth 200, 300, 400? Is it worth 160?
I think Best Buy has done a great job in terms of turning around in the transition. And to your point on services being a real main focus, I actually worry about just in general about Best Buy, can they keep the stuff on the shelves, right? Just given all the supply chain disruptions that we're having. So near term, I think you might see a little bit of a blip on Best Buy. But to your point of what is GameStop
successful? Yeah, can it even get that successful in transitioning to an online? It's got unbelievable competition from big names that want to be in that business too. Why would it be GameStop? As talented as Ryan is. Ryan Chewy.
You've got to bet on him, right? And you got to bet on the Chewy.com model and how successful that has been in the face of Amazon, right? So you have to bet on him. And that's why I mentioned they've made some good decisions in terms of bringing in the leadership. I mean, this CMO at Amazon, from Amazon that they just hired, is really pretty impressive, too. So they got to get the people in. They got to get the cash in the door. So they've got to do the secondary, right, so that they can make all of these changes. And to my point earlier, e-commerce at 34% of total revs, actually, that's nothing that's something that I think is sort of kind of interesting because it was only 12% a year ago. So just think, I don't know if they're going to go Best Buy model. I actually think they're going to go Chewy.com model. And should they do that, we'll see how it plays out. But they need a lot of cash in the door to get that model in the right place.
Right. And Chewy didn't start out with thousands of stores, too. So we have to always throw that out as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.